All right. Now I've got you. All right, let's go.
Yes, let's rock and roll. Real
I've got
life.
35 minutes. That's all I've got. I've got to run to another meeting, and I already texted them and asked if they could start at 15 minutes late. So,
Okay, let's dive right in. Technical problems solved. Sorry for that. I'm gonna introduce you very quickly in Dutch, and then we'll go. Jordi Visser is een doorgewinterde Wall Street veteraan met meer dan 30 jaar ervaring in macro-economie, hedge funds en investeringen. Hij is Head of AI Macro Nexus Research bij 22V Research en oprichter van Visser Labs. Hij combineert diepgaande kennis van traditionele markten met expertise op het gebied van AI, digitale assets, crypto en deelt zijn visie en inzichten via populaire podcasts, onder andere met Anthony Pompliano. Hij heeft een veelgelezen Substack en hij heeft een YouTube-kanaal met meer dan 60.000 volgers en een veelgevraagde spreker over heel de wereld. So if I'm gonna summarize this for you, Head of AI Macro Nexus Research at 22V Research. You have your own Visser Labs project, expertise in AI, digital assets, crypto, and you share your view with popular podcasts like with Anthony Pompliano. You have a Substack many readers find and read, and you have a YouTube channel with more than 60,000 followers at the moment. And I'm a big fan of you, so it's a pity that the technical problems for the second time were a bit of a hazard. But let's go because you have a very interesting view on AI and the AI mid-cycle slowdown, what I think is very important to discuss.
yeah, I'll just jump right into it. First of all, thanks for inviting me again. And yeah, maybe next year we'll practice the day before and make sure I have everything correct and we're all ready. Um,
Maybe a good idea.
so everyone's heard the term mid-cycle slowdown from a macro perspective, and when you come out of a recession, or in the way I like to say it, an unexpected change in growth, it usually surprises investors, and it is usually the best time to invest in the macro world. So coming out of a recession is generally the best time to find value. It's the best time to get involved with things, and that's because the rate of change of earnings is usually explosive coming out of a recession. The reason I've said we're now in an AI mid-cycle slowdown is because most of the earnings surprise, which has been dominating the alpha in the market, has happened because it seemed like we were coming out of a recession. There's a lot of reasons for that, but the majority of them were a massive catch up needed in the AI build out and a lot of money being thrown like it would be coming out of a recession. You had some form of government stimulus, the one big beautiful bill. You had all of these AI companies increasing their capex, and we basically saw a massive move in the AI trade. And I, spending my time with both investors, writing about this, doing my video each week, and then putting together a subscriber paywall to help people navigate this, I've been warning for the last 3 or 4 weeks that gradually, one by one, the portfolio that I created, which is 100 names to represent what I think are the 100 AI names that will benefit on the CapEx build out, being financed by effectively the Mag 7. If you throw out NVIDIA, it's kind of one for one. You've got $20 trillion in companies that are benefiting in my basket out of 100. And then you have 6 companies, ex NVIDIA, that are basically around 20 billion that are borrowing money and spending it. And so we've had a rotation that has happened, but we've reached a point where at some point you hit a mid-cycle slowdown where, number one, the investors have caught up to the surprise. That's the first thing that's happened. Number two, you end up with some sort of pressures coming, regulatory, monetary policy, something along those lines, the second derivative of fiscal. We're not getting fiscal change. We're not getting CapEx change. We're not getting a regulatory change. The government is still supportive. But we have reached a point where, number one, bottlenecks are increasing. Number two, and what I mean by bottlenecks, we have a lot of bottlenecks with inside this complex supply chain. of which, as we learned last year, something as simple as rare earth can stop production of everything across the planet. So we're seeing bottlenecks happen. The second thing that is happening in the United States is we're getting a lot of pushback on the data center build out. That has happened. We're seeing more and more states. It's becoming a political issue ahead of the midterm elections, and you're seeing a lot of delays on the data center side. You're also seeing cost pressures go up. So inflation is usually what starts to happen in the later cycle. So in the mid cycle, you start building in that the inflation pressures are going higher. The cost of building a 1 gigawatt data center has gone from about 30 billion to 50 billion to 60, and now Jensen Huang in the last week has talked about 80 to 100 near term. And then finally, and I'll let you kind of expand more on this, when you get that whole mixture together and you have pricing pressure, which is incredibly deflationary between the models, meaning the Chinese models are at a significant discount. DeepSeek announced a price slash 2 weeks ago. Yesterday in the Wall Street Journal, late, you had OpenAI saying they're going to lower prices to compete with Anthropic. And to make matters worse, this all comes at a seasonal slowdown in usage. And one thing people should understand, SaaS has been hurt because of seat-based models. The problem with pricing and the ARR numbers or the revenue numbers for a lot of these token providers is that token usage is going to go down during the summertime. The schools close and kids are using it less, and about 20% of people in the Western world seem to be out of work each day during the summertime. And without people at work, the models are not running as much as they otherwise would. So when you put it all together and you look at the token index, which has gone down rapidly over the last 6-7 days, I think you just entered the mid-cycle slowdown in AI, and I think investors are going to have to be more cautious.
Het Genie Core Fund, dat is eigenlijk het sluitstuk van de fondsenfamilie die jullie hebben samengesteld. Waarom hebben jullie dat precies gedaan?
Nou ja, het sluit zich op dit moment, hè, want ik heb nog steeds wel 100 ideeën om aan nieuwe fondsen toe te gaan voegen. Nou ja, wat we gezien hebben is die fondsen die we hebben, die zijn hartstikke mooi. Veel rendement, hoog rendement, maar soms doet de een het beter dan de andere en dan lopen ze een beetje uit elkaar en dan komen ze weer naar elkaar toe terug. En veel participanten die er net iets minder bovenop zaten, die zeggen, ja, ik word daar wat onrustig van. Had ik dit moeten doen? Moet ik dit gaan switchen? En we hebben ook deelnemers gehad die elke maand gingen switchen. En die maakten het eigenlijk zichzelf heel onrustig, want je loopt dan eigenlijk altijd achter de feiten aan. Dus we hebben gezegd, als wij dat nou gaan doen, dan kunnen we dat op voorhand gaan doen. Dan kunnen we samen gaan kijken, kunnen we dat op bepaalde parameters kunnen we dat gaan instellen, zodat die wel die blootstelling is. En je kan eigenlijk ook meedoen tegen een lagere prijs. Dus voor veel beleggers was dat interessant. Je doet mee vanaf €250.000. Zou je stappen in elk fonds los, dan is dat €400.000. Dus het was aan alle kanten interessant. Je hebt er nog minder werk aan. Wij halen echt al het werk uit handen. Je hebt er geen extra kosten aan en je kon lager instappen. Nou, dat was een mooie combinatie voor heel veel deelnemers. Om wat meer rust terug te krijgen. En je ziet ook al dat je die grafieken ziet van het Genie Core Fund, maar als je die zou leggen over het Digital Future Fund of Super Commodity, die uitslagen zijn gewoon veel groter. Ik kan daartegen, ik vind dat alleen maar mooi. Tegelijkertijd er zijn ook een hoop mensen die zeggen, ja, dat gaat mij te hard, dat vind ik niet helemaal prettig. Dus die moet ik een beetje wat meer op elkaar gaan afstemmen. Dus ja, eigenlijk is het een hele logische conclusie geweest. We gaan de fondsen die we hebben samenvoegen. En vanuit daar kan je deelnemen. Ja.
Yeah, I saw a tweet from, I don't know who sent it, I saved it here. It was from some guy with a chart about tokenomics that Citadel Securities has, that the price of and the usage of tokens is the price of tokens is going down rapidly, like you said, and that is going to be a problem for the revenue for Anthropic and OpenAI, or is the usage still rising and compensating for the loss of the price for token?
Yeah, and again, I've been highlighting the leading parts of this, like I said, for weeks. And what I try to do in the videos, which I know you watch, this is going to be a very complex world for investors. So, my subscribers, I'm trying to do 3 things for them. Number one is give them signal, what they should be looking at versus what I think is going to help or hurt the market. The second is the alpha side. And the alpha side is not just the names in the thematic portfolio that are there, but it's also the tools. I'm trying to help people use AI more. I think one of the advantages I have is I'm not silo based. You cannot talk to a technology person about what's happening in AI. You cannot talk to a semiconductor person what's happening in AI. You cannot talk to a cooling or a turbine person, because each one of them is interconnected and not one of them is the index. And the indices that are built, whether it is the S&P 500, whether it is the DAX, whether it is the Hang Seng, or whether it's the Nikkei or Kospi, they are cap weighted. And those companies that have benefited over the past 20 years have mainly been software based. So one of the primary things that I've been trying to do for the subscribers is just let them know this is a massive rotation, which is in the very early innings, away from the hyperscalers, the winners of the past 15 years. As we go on here right now, Ronald, they are down 2% for the day. And that's because the news on Oracle was bad. Spending numbers, they need more CapEx. Number two, OpenAI said they're going to reduce pricing. This is a very simple model. If you have delays in building out the capacity needed for the models and the pricing is going down and the token usage is going down, which is what that token index is, it's just one of those periods that starts scaring people. The benefits from AI are much, much greater than the CapEx build out. And so I think people right now, and I know that from my subscribers, most of the conversations and the stuff going on, they've been happening for 3 weeks now, because a lot of the leading indicators with inside AI were already warning us, and the correlations amongst the stocks were already breaking down.
Yeah, just, is that why Anthropic published a letter for they were calling for a global pause in AI development because they say it's going too rapidly, it's becoming too dangerous. Is that maybe because they can't follow the demand, or the bottlenecks are coming, prices down?
Yeah, no, I don't think they were in any way, shape, or form doing it because of the bottlenecks. I think it's what you said first, and this is another part that I didn't mention that I think is a bigger risk, but this is more less fact, more future. Recursive self-improvement is what they were talking about, meaning the models are starting to get so good that they're able to do things on their own. So there's both a security risk for that, which is why Mythos was being looked at by all of these different places ahead of time. But then you have the other side, which is if recursive self-improvement is happening, the easiest way to solve the memory problem, the easiest way to solve all of the chip-related bottlenecks is to have the algorithms get more efficient. And the easiest way for the algorithms to get more efficient is to let something far smarter than human beings work in tandem with a billion agents to come up with a solution. So recursive self-improvement means we're going to solve the memory issue much faster than what human beings think. And so my whole belief has been that people just have a hard time adjusting to the exponential movement. This is the same thing that happened in Q1. They underestimated how fast the adoption would pick up, because it was only in October that the main fear from people was an AI bubble and that there'd be no revenues. Then you see the parabolic chart of Anthropic, both on the usage side, but also on their ARR, and everyone was less worried about the ROIC. Well, now what they should be worried about is what comes with faster ROIC and more agentic world means we solve problems much faster too, and that ends up being a disruption. So the linear world of people's brains
It's going fast.
intersecting with the exponential rise has a lot of implications that just make the world less certain going forward.
Okay. And I know you talk in your videos about the 5-layer cake from Jensen Huang from NVIDIA. And you're telling that we're going to the next stage. Like you said, the hyperscalers are now issuing not only debt, but also equity to fund everything instead of having a tremendous cash flow. So we're going in another stage of the 5-layer cake. Can you explain that?
Yeah, so there's 5 layers, and I think we've been, and what my portfolio that I created was built on was the bottom 3 layers of the stack. So the bottom 3 start with energy, then you have chips, then you have infrastructure. So to make it simple for people, we know what energy is. That's just going to be the natural gas and anything nuclear and anything on the bottom end that is needed to power it. You've got the chips. The combination of the chips and the power is what compute is. And then on the infrastructure, just think Dell or HPE. Both stocks have gone up significantly, and think of it as the server side. Then you go up to the next layer. That's where the models are. And the models being profitable is where Anthropic was doing well. So you had the valuation of Anthropic, the valuation of XAI, the valuation of all of these model companies, including Google, going up. I think they're going to reach some issues here if I'm right about all of kind of the slowdown. The thing that looks the safest to me is the application side. Now, the application side, which is the fifth part of the 5-layer cake and the top of it, that's a little bit harder for people to come up with ways that AI, who's going to benefit the most from AI. So what I've started to talk a lot about is the healthcare side. And in particular, I've been focused so far on pharmaceuticals and biotech. Healthcare has underperformed the market significantly over the course of the last few years. Actually, if you look at it, and I'll be showing you in this weekend's video, you're at the bottom end of kind of a valuation mean reversion place, but also a price movement mean reversion place. And Eli Lilly made all-time highs during this whole kind of sell-off that had gone on. Eli Lilly is the poster child for me of the boom. In Europe, obviously, we've had Novo Nordisk. Well, the Novo Nordisk giving money back to people in the form of dividends and basically being more involved with Denmark from a political level. Eli Lilly has just been spending money relentlessly out of the GLP-1 benefits that they've had, and almost all of it has gone into two areas. One is an AI build-out, which is massive, and the second one is M&A and buying up new biotech companies. I think we're in the beginning of the age of longevity and the beginning in the age of the applications of AI being best used on the healthcare side. It's a massive spending thing around the globe. In Europe and the US, we all know that a good portion of the spending that happens now in the countries is related to aging. It's related to disease. It's worse in the US, but it's across the planet. And this demographic issue just means there's a lot of TAM out there for solutions to diseases. And we're making enormous amounts of progress. We're speeding up the drug approval side. That'll be the first place that you see it. But we're also going to see longevity through all kinds of different places on the gene editing side, the mRNA side, all different parts. So I just think, Ronald, when people look at this, the application side to me is going to be a lot more stable. The infrastructure needs to get back down to levels that make a little bit more sense and consolidate some of this excess burn during the mid-cycle slowdown. But overall, I think it's a great time to be in the application stage. There's one other place that people need to think about, and that'll segue, at least for you, my thoughts on crypto. The crypto side is also the place that people need to be thinking about. Right now, we're in a bear market in crypto. We've been in one really since October. And in the ecosystem, it's been even longer than that. But we're in the early stages of the financial guardrails being used because the agentic side is here. My big thesis on crypto is very simple. The world needs crypto to be able to handle the speed and the velocity of money that's coming. Tokenization is one of the most important changes in all of our lives. And for many people that I'm sure are watching this, in Europe in particular, real estate is a very, very big portion of global net worth. It's much bigger than the stock market. It's much bigger than the bond market, but it's an illiquid asset. And you have to go through a lot of difficult times to be able to borrow money on it, and you have to pay interest on it. Tokenization is going to unleash dormant assets, which means the money supply of the world is going to increase significantly over the course of the next 20 years through the ability for people to do things with dormant assets through fractionalization and tokenization. And I think that story there will lead to far more velocity. And what everyone needs to do, and knowing that Europe is far better than the US on the macroeconomic side, at least from thinking about economics and how important they are, GDP will change forever because the velocity of money is going to increase significantly as the agentic world picks up. At the same time that we're probably going to see price deflation happening on the other side. So the old GDP model will not be representative of what's happening. It will be the new GDP model, which will be built on the velocity of money, which is where crypto plays in.
Yeah, okay. Something Europe is good at. It's nice to hear we're doing something right here at the old continent.
I've learned more in my days in macroeconomic theory from the great European economists than I have from the US one. So you invented it, and I've learned a lot from it over the years. So.
Yeah, it's true that the tokenomics is going to be a huge advantage in the next years, and investors are not looking at those stocks or crypto assets for that. But I wanted to touch one more thing. It's the inflation number. Because you said repeatedly that when inflation goes be above 4%, that will be a drag on the stock market. So if I'm correct, it was 4.2% this week. So what's your view on that?
Yeah, I think, I mean, first of all, factually, that's the case. If you just go back over the last 100 years in the US and you just say, how does the stock market do when CPI is above 4%, and how does it do when it's below 4%? Effectively, all of the returns over the history of 100 years are when it's below 4%. So the fact that we're above 4 should be a warning sign. The thing that makes it a little different at this point is that at the same time, 3-month bills in the US are around 370. So we have basically negative real yields again. Negative real yields historically usually can be good for stocks. They're historically the best time for Bitcoin. I do think as the year goes on, the pressure with the new Fed chair, there will not be any Fed rate hikes. I know in the EU, the ECB raised rates today. But I do not think the Fed will raise rates. If they do, I could see it be a one and done type thing. And that would only be because Warsh is forced into it. The inflation numbers are going higher, but the CPI numbers on the core side remain kind of in check. The PPI numbers, which came out today, are elevated, and this fits into one of the big problems, and I think people should think about. I'm not as optimistic on most people ignoring the situation in the Strait of Hormuz. I don't expect it to be as cataclysmic in terms of a major disruption, the way a lot of the oil doomers have tried to scare people on. But I do believe people are not paying attention to the continuous battle between China and the US on many, many parts that go into the AI data centers. It's not just rare earth. There are many, many, many things. Indium phosphate is one of the things that is necessary, which has become an issue. And when Trump made his visit over to Xi, he brought the CEO of Coherent over there, who doesn't have enough of this. If we don't have that, we can't build up the data centers. So one of the things that's still happening is this tit for tat in energy on one side for the US, and then China having all of these component pieces that go into the data centers as they play nice and negotiate in the press, but behind the scenes, they're kind of using these pressure points to extract better deals and to make sure that one knows that they have control over the other. The problem is for me with that is that the inflation numbers are going to be sticky. I don't expect to see 8, 9, 10% inflation. I actually think it'll be hard to keep it too far above 4 based on the fact that the service side is showing nothing, and wages in the US have dropped down to, again, below 3-month bills and below in headline inflation, which means we have negative real earnings growth now too. And that's not just one number. That is the Fed median wage number and also the hourly earnings that are released in the BLS report. So I think we're at a very unusual time with inflation. I think people should pay attention to it. I do think people should be focused more on the hard asset side coming out of this, the commodities. Gold is now corrected back to a more favorable position. I think 4,000 is a good level. Silver, the same thing. I've been looking for 60 to 65 to continually buy. And in the case of Bitcoin, I highlighted last week that Bitcoin is another place I consider a scarcity asset. I think it's going to do well when gold and when silver do well this time, because we'll have negative yields, but also because I think the government is going to be hyper-focused on making sure for the elections that they're trying to do something to make people happy, and that happiness is going to involve a lot of different items, and I think crypto is going to benefit as well.
Okay, that's we're gonna close here because nice closing act. Because if everything's right, I have Tavi Costa with me in 5 minutes.
Great.
So maybe next time we'll try for an whole hour. I'm looking forward to your video with Anthony Pampliano. I always listen to it on Spotify, and I watch your video on YouTube. But is there ever somewhere else people can find your research?
Yeah, if they go to ai.22vresearch.com, that's where my paywall is. That's where people can get more of the insights. But I think the thing that's become the most important, Ronald, I just want to make sure people realize this. If you haven't yet used AI to build something, if all you've used it for is chat, You need to start to understand the action part of the world. It's the only way, in my opinion, to stay on top of the things that I talked about. The reason I chose this path is because very few people that I meet my age, I'm 59, very few people have embraced using artificial intelligence. My entire business is now focused on, like I said, providing people signals on what matters, what doesn't matter, what's changing, and what's going to lead. Second thing is the alpha to make money, but also the alpha to basically bring you the tools and teach you how. I showed people on this week's webinar, subscriber webinar, how to build their own Jensen Huang knowledge base. It's the greatest tool I've created for being able to figure out what things to invest in. And I put that up on the subscriber paywall, along with videos on how people can figure out how to start, but also how to use it. So they can find me there, and they can find me always on X as well, and that'll lead you everywhere else.